Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Tuesday, and I hope it finds you well out there. Our toll-free number, 800-951-0592. Like you didn't know, allamericangold.com is the website. And it is, you know, we say 2024, the year of chaos. It already is, isn't it? The Trump ruling, which, Jason and I, we're not big Trumpers. I wish he wasn't such an egomaniac and all that, but you know what? I voted for him twice, and I may be voting for him for the third time, but I'll say this about this latest one, and I don't, you know what? I'm not an expert. I don't follow all the stuff, and he's got, the stuff with his, his cousin or something, whatever, and Gene Carroll and all that. I don't know about any of those things, but this one had to do the weirdest thing and why you all need to worry about this. And I'm hopeful it gets overturned. But this was a case where the bank, in this case it was Deutsche Bank, said, hey, you know what? Yes, we believe in this, mostly centered around Mar-a-Lago, that the property is going to be worth this. And they lent Trump the money to develop it, like they do. We have that all the time. Big commercial development, and in this case, high-end commercial development. And at the center of this case is the state of New York said that, well, it really wasn't worth that. And essentially what occurred here is Deutsche Bank said, well, first of all, it was Donald Trump. He has a great track record of building these high-end locales, and he always pays his bills. He got great credit, blah, blah, blah. So, yes, we gave him a high valuation because they knew, right? They knew. They're like, well, guys, in order for him to build it, it's going to cost X, Y, Z, and we wanted to make sure that we got the loan. So we valued it at X, Y, Z, and guess what? We were right, and he paid it, and yeah, I mean, in the state of New York, well, really a judge decided, well, I don't like that. I don't like that you got this valuation, and I don't think it was really worth that, and therefore, ergo, here's all these fines, right? Blah, 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 and da-da-da, and yada, $385 million in penalty. I'll just say this. Is this the country, is this the United States now where the banks can go in and say, yeah, we gave them that evaluation. We agreed with the evaluation, and we lent them the money, and he paid it back. And then a judge will say, well, you know what? We don't think it was really worth that, so therefore let's go after the commercial real estate developer. Jason, that's just asinine. And really, if you're a commercial real estate developer out there, I wonder what you're thinking right now.
Isn't it the business of the lender how much money they want to lend?
Yeah, your volume is way down. Yeah, there you go.
Volume's way down. There we go.
You're good.
Isn't it the business of the lender how much money they want to lend? If I want to give them collateral, if my collateral is 5 ounces of silver and they want to give me $1 million, isn't it the lender's business if they want to give me $1 million on my 5 ounces of silver? That's the way I see it, at least.
Yeah, I think that's the way most people see it. And even, I guess, maybe, and even this one's not really. I mean, if he had defaulted on it, right, could there be an issue? But again, I go back to you, which he didn't, but I go back to what Jason said. The lender's the one that, as we all know, we all get loans. You buy a house. You buy, maybe you're buying the building for your small business, whatever it may be. We all know how it works. The bank sends out an appraiser. and says, hey, the house or the building, whatever it may be, the land, it's worth X. And this is how much money we'll lend you on that particular piece of property. I mean, that's just how it works. And so this decision, it really is something that I think a lot of people in the, like I said, in particular, the development industry are probably sitting there going, what the heck just happened? How can this be? And New York has these some crazy laws that are really vaguely written that they found a little loophole to try to go after this. But again, Jason, I hope this doesn't become precedent because it will definitely have an effect on future development in the way banks and developers and their relationships. I mean, is that what I guess that's the country now? The judge can say, well, you know what? I don't care what the bank says or the appraiser. I know better, right? And you know what? 20 years later, you owe us hundreds of millions of dollars. It really is the year of chaos. It just is.
Yeah, it is a scary precedent, Joe. Anytime government decides you're going to come in and dictate private business, that's it's one of the worst things. You know, it's what federal income tax. That's government dictating what the average citizen has to pay them. It's illegal. It's unconstitutional. But here it is, right? For how many years?
Yeah, exactly right. Another sign of way too much government, right? State, local, federal, you name it. There's too damn much of it. Patriot Radio News Hour. We'll be back after the break. (800-951-0592). Joe and Jason, Patriot Radio News Hour. Quick look here at the markets. The Dow is flat. It's down, but like 15.15. The S&P is down 27. The Nasdaq's down 167. Gold is up again, 2027. Silver at 23.05. The 10-year note down to 4.25. Crude oil at 78.50 right now, and we're talking about the year of chaos and being prepared, because I think after the year of chaos, I think it's going to get real tough. Right? 2024, there's going to be good days, big up days, and some good stuff. There's going to be some bad stuff. Right? Bad days, right? We're going to have a lot of volatility. What ensues after, I think it's going to be a really tough end of the decade for a lot of people, particularly in debt markets. And that's why we keep saying, diversify, being diversified. Why refi? What a great company. First, you know what? How many of you out there are like, gosh, yes, I own Apple. I hate it, but I own it, and I own Microsoft, and gosh, I had to buy Meta and Alphabet, because if I don't buy those companies, right, I'm gonna get hammered, right? I gotta buy the Magnificent Seven, and you just hate doing it, but you gotta do it. Or like a lot of us, well, I'm not doing it personally, but my investor is, right? Right? That thing that's happening. Why refi? You get up to 10.25% fixed rates of return. You can turn your income on. You can turn it off, right? You can use it as hey, I'm just going to use it as monthly income if you want to. You can reinvest it. There's no attack on your principal if you need your money back early. No attack on principal at all. You get it all back. Now, you do have to have $50,000, but you can use an existing IRA. Some of you can use a 401k. And it's actually something you get to feel good about. Right? This is the private student loan market that they're involved in, where most of these people defaulted 3 to 6 months after graduating from college. Because unlike the federal money, You don't get the deferment. The federal government only will lend you $20,000 in over 4 years, right? They'll give you $5,000 a year. But I don't know a single. I don't think you go to community college for $5,000 anymore. Right? I mean, you definitely can't go to U of A or ASU or Colorado State. Right? You can't go to those places for $5,000. So you gotta go to the private lending markets. And of course, just like that, they get all the protections. It stays with them forever and blah blah blah. Well, why refi? They go through this huge process because they agree. Listen, not all of these people deserve a second chance. What they found is a lot of them do. They've got a good job now. The problem is the student loan default that's on their credit scores. Their credit scores are like 405, and they can't. The good part is they don't have a lot of debt because nobody will loan them any money. The average person that YRefi helps has their entire student loan debt paid off in 8.5 years. Totally paid off. That's like a car loan anymore, right? They pay it off. And so, you get great returns along with, man, you can feel good about it, too. That's hard to do, right? You can't say that about a lot of things anymore. Check them out, investyrefi.com. That's the word invest, the letter Y, REFY.com. Or call them at 888-YREFI-24. And Jason, just one last thing on the Trump thing, because I did not know this. Just for Donald Trump to appeal, because, and again, crazy laws written by government, he has to pay a deposit, a non-refundable deposit, 45, because they made, and part of the reason why they threw this huge judgment out that I'm learning now is they know this law in New York. So he's got to put down like $45 million just to appeal it. And so it's going to be interesting. They are also charging him 9% a day, so it's costing him $90,000 a day in interest. Man, it really is scary when you think about some of these laws that are written that most of us have no idea. I mean, really, truly have no idea what it is that the government's capable of, and there's enough loopholes in a lot of these laws that, Jason, they really can go after anybody whenever they want. And now, yesterday on the half-empty cup, we talked about the Supreme Court case where they're arguing that the government can use what they called compelling, I don't know, it wasn't compelling evidence, but compelling information that they can censor your right to free speech. I mean, it's crazy what's happening right now to America, and most people don't even realize it, right? Because a lot of people, I get it, they're sick of it. Right? They're sick of Donald Trump. They're sick of Joe Biden. They're sick of COVID, right? They're sick of all this. They're sick of war. And they've stopped paying attention, and they don't even really know what's happening right now. No, it's there's a lot of distractions out there. There's a lot of attempted distractions. When it really boils down to what the individual should be doing about all this stuff is half the time, at least, maybe more, you should just shut the TV off, shut your phone off, and go into your own business and your own family, friends, and figure out how that situation is going to get better. There's the control you have, right? You can't control what some judge in New York, what judge in New York is going to do whatever to Trump, right? When it comes to the news cycle, I'm always suspicious of everything. I mean, it seems like the more Trump fights for freedom, the more freedom we lose. Isn't that kind of weird how that happens? Yeah, that's what it seems like. It seems like it's the way it's supposed to happen. So, I try to focus on local as much as I can. Interesting point, right? If Donald Trump had ridden off into the sunset, right, they probably would have let it all go, right, and none of this would have happened. But by him not riding off into the sunset. I guess we found out what this is really all about. So it's crazy. We had earnings out today. Walmart came out. They beat earnings. Not the typical Walmart. 4 or 5 cents, and we beat revenues. Same source sales. Very interesting. They were up 3%. Last year, they were up 8.5%, so up a lot less this year. The interesting part, the average ticket was down, and Walmart is saying, we've got a lot of people shopping down. In other words, people that, I go to the higher store. I go to AJ's or Sprouts or I'm shopping at Whole Foods or whatever it may be. But you know what? Got to the point now, I got to pinch those pennies a little bit. I'm going to go to Walmart instead because it's cheaper there. And then the other thing Walmart warned about is what sales look like for the rest of 2024, well below Wall Street expectations. But the stock hit an all-time high anyway today. And then Home Depot sales down 3%, the fifth straight quarter in a row where sales are falling at Home Depot. They didn't give great guidance either. Home Depot stock was down today. And when you look at it, for Walmart to say sales were up 3%, kind of tells you that sales were probably down if they hadn't raised prices, right? If prices were the same this quarter as they were a year ago, sounds like sales would have been down. And look at Home Depot. Home Depot sales were down 3%, Jason, despite higher prices at Home Depot. So the retailers, kind of an interesting picture today. But again, normally when things slow down, this is kind of what we typically see, right? Walmart ends up being a winner because they got the cheaper pricing, and then the other retailers just have negative sales.
Yeah, what do you say? I mean, Walmart is the last place to go to stay cheap. I guess there's the dollar stores. I guess I don't really do much of that. My wife has done some of that when certain situations like birthday parties or whatever it is. But yeah, that's what ends up happening. You have to pay for your essentials, and then if there's not much left, you have to go to what's the cheapest, right? Yeah. And sometimes the essentials, if I got to find the cheapest essentials, that's usually Walmart. And so when Walmart starts to do poorly, which there is some of that information, once in a while, to talk about Walmart, not quite what they used to be, that's when you know things are going to be bad, Joe. It's a good indicator.
Yeah, and then the conference board, the leading economic indicators, continuing this decline, and they've been declining, what they call the leading economic indicators, for a long time. This is the 22nd straight month of declines. That now equals the longest streak of consecutive months of decline since right before Lehman Brothers. And this is kind of the things that catch my attention, right? We're starting to hit, we've gotten now the inverted yield curve. It is now the longest inverted yield curve in U.S. history. What was the previous longest one? The Great Depression. What was the second previous long one? Lehman Brothers, right? The financial crisis. And Jason, these are what I call the bubble indicators, right? Because when you see these indicators that go now, look at, like Elliot, that's almost 2 years worth of declines, right? This is kind of the bubble just getting inflated, and we know, right, when it does burst, it's going to be an ugly one. The biggest positive contributor to the index was stock prices, which has been about the only one. over and over, very consistently. The biggest negative contributor, and this one was interesting because you don't like to see this one, was the average work week. So this is another sign, right, on this jobs stuff, that all of a sudden, maybe are they laying off? We get a lot of layoff notices. We haven't seen a big move in jobless claims. But, Jason, the leading economic indicators are saying that people are working less and less hours.
Yeah, and I think that we've talked about that I think sometimes some of the jobless claims, first-time jobless claims, unemployment numbers are skewed because instead of firing people, because we talked about in 2021, these businesses with the inflation, they couldn't find employees. And so I think these businesses have been a little shy to fire people, so let's just ratchet down the hours, and what do they tell the employees? Like, well, it's just business. Right? And so what do the employees do? They have to go find another part-time job. And if they get fired from one or two of their part-time jobs, they can't file for unemployment. So, I think less hours per week I think that's part of the normal day-to-day business here in 2024, Joe.
Yeah, it's sure starting to look that way. Patriot Radio News Hour will be back right after the break. 800-951-0592, Patriot Radio News Hour here on this Tuesday. Well, I hate to say it, but Fitch says we may have another smaller problem when it comes to multifamily. Wolf Richter, again, I talk about Wolf here. He's does some really good research. Wolf Street, the website, apparently, according to Fitch, up to 49, I guess they didn't want to quite get to 50, what they're calling smaller banks loaded up on multifamily loans that are now going bad. They're saying that the vacancy rates in the Sun Belt states, particularly Texas, Florida, Tennessee, and the Carolinas, are now going to cause potentially these 49 banks to go under. Now, these are much smaller banks. When we look at multifamily, that's your apartment buildings, in case you didn't know that, multifamily apartment buildings. And again, this is another issue caused by the Federal Reserve. Right? They're sitting there talking about, oh my gosh, look at the federal government, look at what these morons are doing, and look at how much money they're spending, but they never own up to what they've done. 15 years of zero. So what happened in the case of these banks is they loaned out money for these multifamily, these apartments. And as we talk about commercial real estate, it's not like you and I. As an example, I own the building here in Arizona. Jason and I own the building there in Fort Lupton. Right? We make our mortgage payments, right? And boom, it's paid off. That's not what happens with these big projects. Right? We talked about it a lot with commercial real estate. It's the same with these multifamilies. They do the interest-only loan thing. They do the adjustable thing because they want to pay the least amount possible because it's going to take a while to fill the building up. Well, all of these loans are coming due. And what's happened now, obviously, interest rates are much higher. And some of these properties, unfortunately, they built so many, they're not full. And guess what? They're starting to go into default. Now, Fitch notes that most of the multifamily lending is concentrated in the banking system. 40% of all multifamily loans are held by 10 banks, according to Fitch, right? And those are the bigger banks. So Fitch says, they're going to be okay. But here's the problem with these bigger banks. They got commercial real estate problems. Now they got multifamily problems. We already know about credit card. By the way, big credit card merger as write-offs start to surge, right? Did you see that? Credit One, what's in your wallet? Buying Discover card. That's actually not a great thing. And again, more or less choice, right? I know that's not grammatically correct. The illusion that you have choices, right? Everything owned by just a handful. But in the case of multifamily, they did say that 49 banks, unfortunately, that have their average on these banks is about $1.3 billion in assets. So these are pretty small banks, right? When we look at Silicon Valley Bank as an example, they had $200 billion in assets at one time. That these smaller banks, Jason, look like, as we talked about, looks like these things are just going to get gobbled up because of all the low interest loans that they, let's face it, those were the only loans that were out there to be made. But now that interest rates aren't where they need to be, right, this is the problem. This is why you keep hearing Wall Street screaming about rate cuts, right? This is why, because they know, hey, maybe these 49 banks, one at a time, aren't a problem. But if these 49 small banks all go under, and next thing you know, they take down 100 other banks that had, $2 billion or $3 billion in assets, right? Well, you can see where this chain reaction can come from.
Yeah, it's all connected. We used to have a competitive business system in this country, and it's just gone. It's gone straight to the top, right, Joe? The smaller guys are smaller fish being gobbled up by bigger fish. It used to be that the small fish locally could guard their territory, so to speak. But the rules and the regulations have just subsidies for big companies. They've made it so that if you're somebody who wants to control the business of a country, you don't want 10,000 small businesses. You'd rather just have 10 large businesses that you can tell what to do and when to do it, and you give them favors, so they have to march to your beat, right? And so this is where it's going to be with these banks. Discover card being bought, that's not good. I mean, I remember when I was I think I was a kid when Discover first came out, and it was like a new choice for credit cards, and where's that? Where has that gone, Joe? And that's ancient history. And so, yeah, that's why we're going to see the banks go away. Yeah, that's going to be the question, Joe. Are these banks going to fail and then get gobbled up, or are they going to get bought up? And I don't think there's enough liquidity. I don't think there's enough ability for the bigger banks to swallow up the smaller banks. They're going to wait for them to completely fail and pick up the skeletons, which are going to be a lot cheaper.
Yeah, I mean, right, that's just the better way to do it, right? Let's look at Silicon Valley, right? It was, J.P. Morgan pretty much stole, right, the assets, right? Wait till they go under. We'll buy all the stuff we think is good, and then we just leave the FDIC with the leftover garbage. But we'll see. And again, this one, it's early with this one. Okay, but this is what we talked about, at the beginning of the show. I think the rest of this decade, after the year of chaos this year, it gets a lot harder. There's just no good outcome here because of let's just call it what it was. The idiotic policy of the central bank to leave rates at zero for 15 years. It just really put all of these banks in a terrible position, and the Fed should have known better. They knew how commercial real estate worked. They know how the big developers work. They do interest-only type loans, and now, all of a sudden, a project that looked really good with a 1 or 2% interest rate It doesn't look good with a 7 or 8% interest rate, right? It's just kind of easy math. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour. Yesterday, we ran a great special. We had a $20 gold piece and 2 peace dollars for $21.75. Gold's higher today, and as I said, 20 now, right? 22, 25, 22, 35 probably if it's going to close where it's at right now. Here's what we're going to do today. We've got 20 left from yesterday. That's it. But let's do them. Got these 2020s. You can get 2 peace dollars with it for $21.75. Or, since we actually talked about Donald Trump because it was financially based here, or you can get a $20 gold piece at $21.75, and we'll give you 2 Trump silver mugshot coins. So if you want some Trump mugshot coins to go with it, same price, $21.75. Gold right now, $2,027. There you go. So either you can take the peace dollars, 2 peace dollars, if you want 2 Trump coins. Maybe you want a peace dollar and a Trump coin. However you want to mix it up, we don't care. We've got 20 of them left at 800-951-0592, a $20 gold piece and 2 silver coins, right? Whether it's the Trump mugshot coin or a peace dollar, you get to decide how you want to do it. And Jason, I think it's going to be very, very interesting as we start seeing, like with Capital One and Discover Card, massive consolidation, I think, is what we should expect in the debt markets. How about like Walmart? $2.3 billion to buy Vizio, the TV maker, right? Walmart just said, it'll make more sense for us. We sell a crap load of TVs anyway. We might as well just own it, right? We're just going to own it. And it's an embarrassment of riches, right? Where it looks like you've got all of these choices, right? You still, well, gosh, I've got all these different brands. They all got different names on them, but they're owned by the same people. Did you not hear me?
No, I heard you. I thought you would continue on. You're on a roll today. Once again, we're talking about having less choices because the biggest players, I don't know how many times we can say it, Joe, but you can't have a wide variety of choices of things you want to do in life if there's only 2 companies doing it. And we already know when it comes to anybody that's gone public, that BlackRock, Vanguard, State Street, they own controlling issues in almost all the big companies. They own a large amount of, you think Coke and Pepsi or McDonald's and Burger King are competing corporations, but they're owned by the same companies. So if you are BlackRock and you want McDonald's to change something they're doing, you have a lot of influence to just change it. And you can go to Burger King and say, you know what, we're going to change the way you do it also. And pretty soon your choices go down to nothing. This is why, Joe, you bring it up, is that, look, we kind of talk about standard of living. Well, part of the standard of living is having a choice to do what you want to do. Yeah. Hey, I don't want to eat this. I want to eat something better, until suddenly better becomes the thing you were trying to avoid. I've witnessed this over the years. We just had better choices just years ago, and now it's gone.
And this is about credit, right? And when you think about not having choices, we're already down to, 4,000 banks, and then they made a bunch of other things that really weren't banks into banks. So a little over 4,000 quote unquote financial institutions. Back to the 80s, right? We had like 18,000 of them. It's just choice. Then you hear Fitch talking about, hey, well, these 50 banks, they're done, right? And okay, and these 100 banks and these 1,000 banks, and now this talk of central bank digital currency, now credit cards. It's not like we had a lot of choices to begin with, right? But now there's two of the big players in the credit industry, Capital One and Discover Card, right? Well, now it's just Capital One. Less choice. Easier, and the problem with less choice, it's easier for the government to control. Simply put, hey, we can get you guys to do our dirty work for us. We saw it with COVID, where companies started mandating, well, you got to get vaccinated, even though there was no law, executive order. That's not a law. But the government is, and what we're seeing is the government is getting these massive corporations to do their job for them. And when it comes to the credit markets, real simple, right? They can enact social credit scores. They can they can do whatever, a carbon footprint, whatever they want. And these companies are like, yep, we're going to go along with it. And then all of a sudden, right, you're almost forced into it because there isn't another choice, right? And that's really what we're seeing today with these two deals here, just less choice. And now Fitch coming out and saying, hey, by the way, yeah, there's going to be less banks. And Jay Powell already, remember let's not forget that 60 Minutes interview. Hey, tell us about 2% interest rate. When did that 2% inflation, where did that come from? I don't know. We made it up, right? Oh, well, what about banks? Well, there's going to be less banks. Yep, banks are going to go under and banks are going to get consolidated. I mean, he just said it out loud. Easier for them to enact a digital currency. It's just that simple. Patriot Radio News Hour. What did the founder and executive chairman of FedEx have to say about the debt crisis? That's coming up in the final segment. Final segment, Patriot Radio News Hour on this Tuesday. The half-empty cup coming up next. We're going to be talking about the cost of illegal immigration to the taxpayer on the show coming up next. If you want to follow us, go to 1360khnc.com and you can catch it there. But the founder of FedEx, he's also the executive chairman, Fred Smith, talking about the United States debt and its debt problem, saying that the BRICS alliance has set out on a deliberate course to dethrone the dollar. If that happens and we can't sell our bonds, I will assure you the standard of living that we all enjoy today will be a thing of the past. And he highlighted that the dollar must remain the world's foremost reserve currency. And Jason, I think that was really the main point of what Smith was saying, which was saying, hey, listen, I'm not saying that the dollar, won't be held. But if we're not the foremost reserve currency of the world anymore, there's no way they're going to be able to sell these bonds. And again, we're getting to that point, right, where look at how many we have to sell. Just this year alone, we're going to have to sell over $10 trillion in a single year. And think, 10 years from now, that number is going to be, what is that number going to be? 15 trillion a year, 20 trillion a year. And if the dollar isn't the king of the reserves, and as he said, the foremost, if we get down to closer to where, 50% of all the transactions are in dollars, that's going to be a big problem. That's a big problem for the United States in this debt. And you're starting, Jamie Dimon's already warned on it. A lot of the executives are all saying the same thing. And these guys, they're global companies. They see what's happening.
Yeah, I don't see how we're not going in that direction. Just we talked about briefly yesterday about how same type of grocery trip in Russia is $105, what would be about $400 in America. That's not as secure of a currency as the world wants. You have inflation in America. That's inflation for everybody who uses America's currency. So the way that the world system will have an antidote is to just use less dollars. We're in a world system whether we like it or not. So their antidote is not. And I know that people are, the dollar's coming to an end. The dollar is going to be dead. Well, then why didn't the pound go away? Right. So the dollar will be here. But you're right, Joe. The less that it's used, the worse it is for this country. The standard of living that we talk about keeps going down. It's still a pretty good standard of living in comparison to several places. But the standard of living in other places is starting to look a little better, isn't it, Joe? When you talk about Russian groceries, maybe it's not as good to live in Russia versus America. But how long do we got till our standard of living drops to the level of other countries?
And that's going to be the interesting thing here is, what is that number? I wish I knew, right? Don't you wish we knew, right? Does it break down at 55% or 50%, right? Or is it going to take something far greater than that? And that's the part we just don't know already, right? We're struggling now with these auctions, and again, it only gets worse. $20 gold pieces, $21.75. You get your choice of with either 2 peace dollars, 2 mugshot coins, mix them up, all for $21.75. You get 2 pieces of silver and a $20 gold piece. 800-951-0592. Jason and I, we're coming right back with the Half Empty Cup.